To introduce the panel, we're going to be talking about the venture capital industry mainly, specifically in crypto investments. And start off by introducing myself. I'll be the moderator. I'm Taran. I just finished my third year physics at Cambridge. I've been in the crypto space for about 4 years, and I personally know most of the people on the panel. I'm also the founder of a young crypto company, so I know what it is like to be on the founder side as well as to be on the VC side, because I've been investing in the space for the last 3 years. I think let's start off by individually introducing ourselves. Hi
everyone, thanks for having me. My name's Asim. I work for Eterna Capital. I'm a maths graduate. I've been in the investment industry since 2010. So I come from a more traditional finance background, investing and advising in pension schemes on various aspects of their investment arrangements. Got into crypto back in 2016 before the DAO hack. Worked for BlackRock for a while, and then met some people there. And our team consists of ex-BlackRock founders as well as an entrepreneur. So we cover a bit of both sides of the industry.
Hi everyone, my name is Alejandro. Probably Alex would be simpler to address me. My background is quite technical. I actually founded a couple companies here along the way, and it took me many years to actually get them to be successful, right? So it's not like I have a secret recipe or anything, but I found that joining Tagus, I could help other people to actually take the companies to be successful as well, and that's what I'm trying to do with Tagus. So thanks.
Hey everyone, my name is Vanessa. I'm the managing partner of Aglaé Ventures. I've been in crypto for about 10 years now, but prior to that, I was 15 years in traditional finance. Discovered Bitcoin in 2013, paid attention but not that much, and then discovered Ethereum in 2016, where I joined as one of the first employees at Consensus. And now I run an early stage Web3 fund that invests mostly in tokens.
Hi everyone, my name is Stephen McIntosh. I'm a general partner at Caratage. Caratage is a prop hedge fund based in London. We have quite a broad exposure to crypto across 30 plus direct investments, which include layer ones like Miston Labs, exchanges like Gemini, ZK Tech like Alio, who I saw here today, right through to payments companies and a whole host of different things in between. We originally were seed investors in Polkadot back in 2017. That's how we began our crypto journey. In addition to direct investments, we are also an LP in 16 venture funds in crypto. They range from really early stage seed, pre-seed funds like Robot Ventures and Hypersphere, right through to some of your more kind of established names that you might know, such as Multicoin, Powerify. We're also large investors in Animoca brands, both in the equity and also an LP in their fund. So we see quite a lot of the space. Prior to crypto, I was in AI for almost 7 years. I ran a machine learning company that specialized in natural language processing, which was a spin out from the University College London AI Research Lab. We ran that company for a few years, then we sold it to a NASDAQ listed business. And it's great to be here at a university blockchain club. I started my first company when I was at UCL when I was very young. And then, as I say, my most recent company was founded with some friends from UCL as well. So it's great to be at a university, blockchain or entrepreneurship club, and we can talk about that today.
Yeah, thanks. I think we have a very diverse panel here. We have someone who comes from a traditional finance background, moved into crypto early stage investing. We have someone who was a founder, a technical founder before, and then started his own crypto venture fund. We have someone from enterprise who's worked at Consensus, one of the premier crypto companies of all time. We have ex-founder who actually went from AI into crypto, and now it sort of comes nicely into my next question. If you're a student right now, even though there is an abundance of venture capital both in the crypto and AI industries, how do you allocate your time? How do you choose what problems to solve, what to focus your time on, and who do you go to for advice? Let's start off with Stephen.
Okay, so I think in terms of the opportunity for young, small people to build in crypto right now is still super exciting. You might see that prices are down, kind of valuations depressed. There's a lot of kind of bad press with regulation in the US, but the space is still really alive and really electric. And if you think about it, going back to first principles, what is crypto all about? Well, it's about the progressive, I think, realization of open source technology and democratizing access on the internet through decentralized means. Many people will obviously see the incredible AI moment that's happening right now, and it really is a platform shift. But I think it's important not to be just distracted by what's hype and what's the direction of travel on Twitter. The real reason you build a company is from first principles, whether it's because you see something that fundamentally doesn't work and you can do it better, whether you think there's space for infrastructure design or application design in a way that other people haven't really thought about, or whether it's something more kind of blunt, which is how to make money and you want to be entrepreneurial. I think Taran's a great example of spotting an opportunity and going after that. So, entrepreneurship takes many forms, but ultimately you should build things for the right reasons, which is like a first principles approach to spotting an opportunity, improving something that already exists, or having a really kind of interesting approach to like the design space, such as the consumer layer. I think in terms of the landscape right now for venture in Europe, it couldn't be more exciting. You've seen a huge kind of regulatory backlash in the States with the SEC around what's security, what's tokens, et cetera. And for the past, I think, couple of years, well, since I've been in my career, the US has always been the best place to raise money, especially if you're on the West Coast. There's just so much more capital there. But with Andreessen Horowitz coming to London, which is a big kind of boon for the industry, and I think with some regulatory clarity with MiCA in Europe, Europe could well be a destination for entrepreneurship in crypto to flourish in the next couple of years. And I think a lot more capital will be coming here. I know for one thing that a lot of US-based funds even are increasingly focusing their attention on the European landscape. So I think if you're here and you're really interested in decentralized technology, open source technology, this is a great time to be building, and it's a great time to be exploring ideas. There's no roadmap for entrepreneurship as a young person. You've just got to keep trying and keep failing and keep improving. And I think this is a really great time to experiment in the space. There is a huge infrastructure change happening in crypto right now. There's monolithic approaches to the blockchain, there's modular approaches to the blockchain, and it really is getting rebuilt right before our eyes. I think you mentioned consensus. Ethereum is only 7 years old. And look what it's accomplished in that time. It's astonishing. And so I think the roadmap for innovation is going to be quite significant over the next 10 years, and it's a really exciting time to build.
I think that's a good point. I also think the European and American landscapes for startups and venture capital are quite different in terms of who the LPs are and how capital's really allocated. Vanessa, what do you think the differences are? What's the future of Europe?
So we see different investor profiles, I would say, in the US and in Europe in general. Of course, not people here on the panel, but in Europe, traditional VCs are mostly financial VCs coming in at later stages, and by late I mean like seed stage rather than pre-seed. And in the US, you see a lot of ex-founders and entrepreneurs who have a higher risk appetite and will come in very early just based, on an idea and the trustworthiness that they have in the founder. And so that creates a different investment profile for the companies, and I would say lesser risk appetite in Europe and less requirements in terms of returns on average. And of course, I'm generalizing here, but I think in crypto it changed a little bit because a lot of the investors in crypto invested very early either in Ethereum or Polkadot and really understand the technicalities of what it is and really understand the drive of the founders. And so I think crypto is a level playing field in Europe and the US, whereas traditional financial and tech VCs still have this distinction and lesser appetite for high valuations, et cetera.
Go for it, Alex.
No, I mean, about Stefan's question, I think it's an amazing question, right? If I were a student in Oxford and I were to actually start building my company, whether I choose AI or would I choose crypto, right? To me, that's an excellent question. And if you think about the different generations of companies that have been created on technology over the last years, starting in the 2000s, right? You see that the first generations, the Google, the Amazons, these guys, I mean, the entrance barriers were like quite high, right? I mean, if you want to create something and scale, you didn't have the software. Open source software was not as developed, and you even have to take care on your backend. You need to actually think about hardware, right? You need to actually buy servers, host them, connect them to the internet, buy more stuff in order to grow, right? On the second generation, when these companies actually grew, I mean, and thanks also to open source technology, well, basically it was simpler, right? For companies like mine, you could actually start something, use Amazon Cloud Services, and suddenly you don't need that much amount of money. You don't actually need a physical place to put your hardware, right? And I guess crypto is the third generation, right? It is a dream for entrepreneurs like me. If you think about crypto, it's a dream in the sense that you don't even have a backend, right? So you have this thing which actually seamlessly scale to infinitum, basically, right? And you simply have to take care about the front end, right? Everyone that actually can start coding with very little resources. You don't need to pay expensive bills on Amazon Web Service or buy the hardware yourself. So it's a dream come true, right? Whereas if you think about AI, it's probably on the first stage, right? You need to think about buying GPUs. You need to think about how I'm going to develop the software that in some cases, obviously there are some things which are open source, but others are not, and you need to build a lot of infrastructure software. So long story short, I guess that if I were a student at Oxford, again, I wished I were, I would start in crypto, right? Yep, that's my take.
Also, another thing to add is it's a very bad market out there. There's lots of press about how crypto is being subdued, the US and security, the SEC, their implications on crypto, and also like publicly, it's almost like we are dead and we are dying. And this bear market is completely different to the way 2019 was. As you said, Stephen, as a founder, you require a lot of resilience. You need to keep trying again and again and again and again. And 10th time, you'll probably be successful. And the way funds are now allocated in the current market is very different dynamic to what it was in 2020 or 2021, because now it's coupled with a terrible macro backdrop. And I'm a student founder. I just raised a seed round for my company, and I want to understand, starting with you, Asim, how it is that early stage and also early and growth stage investors are now looking at crypto, what trends they're looking at, what investment themes they're looking at. ZK has done quite a bit. Stephen wants to go quickly.
One thing I was going to say as well is that it's not a choice between, as you put it, should I build AI or should I build crypto? They're not kind of binary. If you look at the future of machine learning, right now, realistically, there are only two entities in the world that can really create these multi-model learning systems, and that's OpenAI and DeepMind. And it doesn't make sense to have that much centralized power in the future of machine learning. So I think it's an inevitable direction of innovation that machine learning and AI will become more open source. Open source models are a big driver right now of innovation in the space. And at some point, compute will be distributed. It's still a bit early for that because it's like a nuclear arms race, the compute that you need to run these models. But I think over time, that processing cost will come down in the next 2 years, and the barrier to entry will come down massively. And I think if you believe in a I think one way to put it is that the internet, as we know it, was built over the past 20 years, and it wasn't built with the user's sovereignty in mind. It wasn't built with privacy in mind. You know, the future of the internet could well be that you have sovereignty over your data, you have privacy-first technology, and content creators can own what they produce. I mean, you're seeing it right now play out with Reddit. You know, that's a really good example. I think that, you know, just going back to what I was just saying, that these two things aren't binary. You know, crypto will dovetail with the direction of AI development in the future as well.
I also think if you're building open source models, it becomes really hard to monetize, right? Like if you're a founder, you want to get to, I don't know, cash flow positive really quickly. I guess if, you know, having that long time horizon of building open source models and letting the market do its thing is quite hard to have. So you need to be a very special type of founder to build those models as well. But yeah, so let's talk about investment themes.
Yeah, so on the funding side, I think it's worth noting that every VC is different in terms of who's backing it. That can impact the, you know, what are their objectives? Is it purely ROI driven? Is it financial? Are they supporting certain ecosystems? Are they focusing on a specific region? Are they early stage? Are they late stage? Do they like to see product market fit first? So it's not a case of a one size fits all, and also the value add from each VC is different as well. And you could say this personality of each VC within blockchain has matured over time as well, because if you think about how the ecosystem has grown over time, I remember when we started Eterna back in 2018, you were investing in layer ones. Of course, we're now having new layer ones as well, but these layer ones now have ecosystems. Now you have certain VCs who back then were like layer one agnostic, you could say, but now whether it's because they are funding their previous winners or it's because they have some kind of, you know, advantage because of their information in a specific ecosystem, they're now more focused on those ecosystems more than perhaps some others who could be more neutral. So, you know, VCs have started to form a bit of a personality, you could say. And, you know, the funding ecosystem has changed quite a bit. Back in 2016, you know, startups would just raise an ICO, and, you know, the round where VCs came in wasn't even there. Then slowly VCs started creeping in, and when we saw that change, that's when we went from like individuals at BlackRock investing in ICOs to realizing that we need to formalize, bring value add, bring a brand, and start participating in a you could say a more institutional way. And now you know, so you have the VCs who have come in. Now you also have accelerators who provide funding. You've now got DAOs coming in providing funding. You know, you've got more startups, meaning there's more noise trying to get the attention of VC. So these extra rounds is how you kind of break in and get some attention. Similarly with hackathons and things like that.
It's almost like marketing, isn't it?
Sorry?
It's almost like marketing.
It is. It's a massive amount of marketing, and you're pretty much your marketing needs to start early. And I think sometimes people approach this fundraising as if, okay, I need to now fundraise, now I need to network. But it doesn't really work that way. You need a network to basically run your business anyway. You should always be networking, and I'm sure, Taran, as you know as well, that it's not that easy to just approach the VC directly. When you network, maybe you come across someone like you know, a specific company like Coinbase who could become a client, and when they find that you're useful, they become a very valued referral to a VC. Because that's how you get into that channel, through a referral, because referral is extremely important for the vetting process of VCs. It's very hard to go direct. You need to find a connection route.
It comes back to also as a student founder, how do you access financing? How do you approach VCs? Cold outreach just never works, you know, because, you know, the way I met Asim was, you know, we were in the UAE and we met at a dinner, and, you know, Asim ended up investing in my company. You need a very strong initial catalyst. I think as students, especially at Oxford or Cambridge, we are very, very blessed to have excellent alumni networks. So as blockchain societies, you know, Oxford and Cambridge, we should be setting up these, you know, like growing these alumni networks so that these, you know, students can actually tap into these founder networks that can help advise. And, you know, there's lots of different routes that students can go down, fund, you know, like accelerators. I mean, Vanessa, Andreessen's coming to London. You know, what do you make of that? What do you think?
I think it's an exciting opportunity for London and for Europe, because you'll see a very hands-on VC come in, maybe with a different investment approach than the pockets of money that are in Europe. So I think that's going to be really interesting. Talking about, when you're a founder and you're looking for money, I think you know, at a time when we're in the digital world, the power of connection and connecting in person still remains your largest asset. Being able to convey what you're doing and really making it concrete for investors. I think there's several routes of how, the VCs landscape has changed. Right now you have VCs who have raised just before everything fell apart. So very well-resourced VCs, which are continuing to deploy very aggressively. And then you have VCs who are trying to raise right now. It's not easy. And it's really interesting. You talked about the LPs. I see the LPs coming in always at the wrong time. They're very excited to come in in a market when it's hot and coming up, but when it's like crypto winter, they're like, oh no, we're risk off.
Let's tell the audience who the LPs are.
Yeah,
who
that's
are LPs?
where. Sorry.
Who are LPs? Some people in the audience might not know.
Oh, large asset managers. So they need to manage the risk in a very different way than the VCs, and so. If there's too much perceived risk, they'll just pause. They don't need to deploy. And it's always the crypto bear markets, as you know, are the best time to invest. Right now, valuations are down. Really serious founders are here. First, third time, or second time founders are continuing to build projects in crypto, and it's super exciting. And also first time founders just straight out of universities. If you participate in hackathon, if you win a hackathon prize, we organized a hackathon at ECC last year. We really love that venue for finding early stage projects. You don't need to know everyone. You just need to find the right product and everyone will come to you. So that's the avenue. You also spoke about DAOs and other investment vehicles. What's really important in crypto, different from Web 2, is the power of community. If you're able to find really amazing angels that back you, that mentor you, that's going to go a long way into your projects. A lot of founders come in as angels. A lot of crypto founders even have their own VC funds, whether it's Robo Ventures or others. So it's really exciting to be able to leverage their community and their knowledge of the products and how to build in crypto.
Let's stay on that. Let's talk about fundraising for a bit. There's two types of investments that come along in crypto when you're in venture capital. It's equity or tokens, right? Asim, Eternal Capital, is an equity-only fund. Is Tagus an equity-only fund? Equity plus token, but they do tokens as well. But there's that question of where there's regulation, regulatory risk, and where value accrual happens. As a first-time founder, how do you really decide? Because I still talk to many founders, and it's sort of like they just go along with whatever the market, whatever the market's doing. Right now, it's like you raise money for your company, for your entity, by selling shares, which is an equity raise, and then you give all the investors a token warrant, which basically says if you do a token in the future, the investor might get a token in the future. Again, these are like skirting around securities laws. So, how do you think this will change as and when tokens get more regulated in the future?
So, USV recently stated that, despite regulatory oversight, they're doubling down on crypto, and we're a bit in the same category. Basically, our fund is pretty young, so it's 1 year old, and we've been deploying this year and realizing that 90% of our investments are in tokens with token warrants. And the upside in these investments is so much higher, and it comes so much quicker than when you invest in equity, that it's hard to invest in equity after one, unless there's extraordinary founders, etc. So we love tokens. We don't. I'm not saying we don't care about the regulatory issues, but we're also able to work with the teams to ensure that they're taking these issues very seriously, and they're looking into decentralization, et cetera, or thinking about moving their teams or their headquarters. And I think also, that's the ethos of crypto. You want to invest in protocols. You want to invest in these automated platforms that can run without any issues regarding personal or founders that run the whole thing. It's really community and token holder driven, and that's the models we believe in.
I think we're going to do a Q&A in a couple of minutes. Let's go 30 seconds each. Asim, why don't you start us off? Majority of the audience here will be students. What's one or two pieces of advice you'd give them?
I think find a problem which you're passionate about so that you will be incentivized to work day and night to solve it. And I think look beyond just fundraising there's going to be many hurdles. I know fundraising is one of the first things you would come across, but there's going to be many. So I would say start motivated. I think motivation from the beginning is important because it will be tested over time for more reasons than just fundraising.
Sure. I think passion is so important, but sometimes passion seems to be like something very abstract, right? And it's not, right? If you happen to find yourself on a Sunday morning in a blockchain conference, you do have passion for blockchain, right? That's passion. So find your passion, and follow it. And it just feels natural. Don't give up, right? Sometimes it would be so hard to actually make things work, because as an entrepreneur, it's like all the things that you're trying to put together is like a machine you're trying to assemble, right? And each one of the pieces, it's like follow thermodynamics in the sense that it wants to go their own way, right? And you need to actually tame them and put them together just to make them work, right? Don't give up. Continue, and it doesn't mean that you have to keep the same vision always. You can pivot, and that pivoting is very important. So be aware of where you are heading, and pivot, and it's gonna get well. Yep.
I would say don't give up, and grit is number one for me. But I would say be open to feedback. That's one trait that we look at for founders when we do due diligence on them. And, it's very subtle how we assess this, but I think being open to feedback, being open to pivoting is really important, because you need a lot of flexibility in the first year of your project. And you need to really hustle. That's, especially in crypto, I don't know, there's a lot of hustle, and you just need to never stop.
I think a few things I'd say. One is that I spent a lot of time with US universities at like Stanford, Carnegie Mellon, Berkeley, etc. The network effects there because of venture capital are so insane that students come out of university regularly and just launch a company. And there's no shame if that business fails, not one bit. And then they do it again, and they do it again. And they will keep getting funded and keep getting funded. Whereas I think here in Europe, specifically in the UK, it's a bit like, it's got to be the right one. And if I make a mistake, it's going to look bad on my CV, I won't be able to get a job, or all these things come into your mind. Got to try and put that out of focus. I know the pressure of having to get a good job after university. I came from a very working class background, went to uni, and the pressure was there to get a really good job, and I started my first company in my last year of university, which most people thought was a stupid decision, and turned out to be a good one. So, there's a lot of pressure on young people to kind of get the CV built and get the work experience and all those good things. But what I would say is that if you really, really think that you're, motivated most by trying to create something, trying to be entrepreneurial, trying to spot an opportunity, trying to take something to market, then just have a go. There's no shame in it not being the perfect one to begin with. Like, there really isn't. And I think that, to your point before, with Andreessen Horowitz coming, that's just the first of many big US VCs that have come to Europe in the past 3 years. Sequoia have come, Lightspeed are coming. There's a big move towards backing European founders and companies because they've produced excellent returns. And there's always been exceptional founders and engineers in Europe that perhaps haven't had the same on-ramp to company formation as you would get in the West Coast of America, right? So all I would say is really have a go, experiment, and when it comes to crypto specifically, don't focus on the money. A lot of people, try and launch a business with a token because they think, oh, I'm going to make loads of money in 2 years. That's not really a great reason to start a company. Try and build something because you think that there's a huge latent demand for something that doesn't exist. And in crypto, most of the money has been generated through exchanges, through stablecoins and payments, and through like L1 tokens, right? And L2 tokens recently, infrastructure stuff. No one's really cracked the $1 billion consumer app yet. And I think that's where a lot of the value will accrue ultimately in crypto. So try and think about that space. And I think that's it's a pretty open, area for innovation and try and attack it.
Yeah. Just wanted to add one thing. There's a big hype about being an entrepreneur. Like people like to say they're entrepreneurs, but it's okay to not be an entrepreneur. Just want to make that clear. You can be entrepreneurial and join a startup or be entrepreneurial in your company. It's an attitude. So even if, at the beginning you don't start the company, you can join one. And then in a few years down the line, you can start your own. So life is mobile and it's just the beginning of your journey, right?
I think that's fantastic advice. Let's move on to Q&As for the last 10 minutes.
Hello everyone, my name is Karim. I am a front-end engineer, Web3 in Binance, in the Trust Wallet department. I had mostly a question to Steven and Alejandro regarding artificial intelligence and how it connects to crypto.
Sorry, say it again.
The decision between crypto and artificial intelligence are two different things. However, we have seen mostly in those last couple of years, a lot of crypto projects based on artificial intelligence. So how do you guys see the connection between crypto and artificial intelligence? Thank you.
I think what I would say is that directionally, they should be linked in some sense. And I kind of just repeat the same thing I said before, which is that right now, all of the really powerful kind of multimodal learning systems are being run on insane supercomputers by 2 entities in the world. And that can't really persist, right? And I think also training will come down, the cost of it in the next 2 years, which will open up the design space for a lot more entrepreneurs. I think, the big theme for me that I'm personally biased towards and focused on is that technology and the infrastructure of the internet was not built with sovereignty of the user's data or privacy in mind. And that's fine. That was, it's only, not that old. But in the next instantiation of the internet, I think there will be robust mechanisms whereby users can participate online, can own their information, can have sovereignty. And I think ultimately, technology and the internet is like an open source phenomenon. That's where it started and that's where it should go, which is that it democratizes access and it gives everyone in the world the opportunity to be a part of that technology. I think the most obvious use cases for where crypto and AI are being talked about as linked in real world use cases at the moment is in terms of distributed compute. There's a company called Gensign that just raised money recently, which is trying to run kind of, training on edge compute. There are also these ideas of ML marketplaces where people could submit models and kind of train data and get paid in reward for that. Honestly, I think it's still very early to see where these use cases really manifest at the moment. But that being said, it's a really great time to try and be thinking about those problems and how to solve them. That's what I would say.
So in traditional private equity, the standard model is 10 plus 2. Do you think in crypto, where the kind of cycle is so much faster, is this a kind of working model for funds? Or we should kind of reconsider this?
Yeah. So I think what's super interesting, which we didn't touch upon, is how crypto funds are different from Web2 funds. So you know, when you get the tokens, you're able to do a few things with them. You can stake them, you can run infrastructure for the project, and then you can, if you're locked out of your staking rewards, you can sell them immediately on the market. And so the timing of the liquidity of the funds is something that is very important. And I think that some funds in the past have not totally leveraged because they want to be perceived as long-term token holders. And, you know, when everything collapsed, then they weren't able to realize their profits. So the timing of that and thinking about how you interact with the project, whether it's through staking, whether it's through governance voting, whether it's other ways to help the project, is very different than what traditional VCs do. And it's true that the liquidity comes, you know, you're locked up for like 2 to 4 years, it could be even less. So imagine when you have to invest in equity and you have to wait for the company to do an IPO or the next rounds of growth. The timing is, you know, minimum 8 years where you can actually resell your positions. So I think I hope that answers your question and how we think about it, at least on our side. Or selling secondaries, of course. Well, when you have to get out of a token position and you don't, you know, you want to keep the latest value and the token isn't out yet, you want to sell secondaries and you call Tehran, of course.
All right, I think we're out of time. Thank you so much for coming today, guys. You know, thanks for the Oxford Blockchain Society for hosting this.